The maximum number of partners is mentioned in A. Companies Act, B. Partnership Act, C. Limited Partnership Act, D. None. The maximum number of partners is now mentioned in the Companies Act. It's mentioned in the Companies Act. Correct answer A. A and B are in partnership, sharing profits and losses in the proportion 3:1. On 1/4, they admitted C into the partnership on the following terms. C is to purchase 1/3 of the goodwill for 2,000 by paying cash. 2. Future profits and losses are to be shared by A, B and C equally. Set out the journal entry to the above arrangement in the firm's journal. A. Cash or bank debit 2,000 to A's capital 2,000. B. Cash and bank account debit 2,000 to B's capital 500 to A's capital 2,500. C. Cash and bank account debit 2,000 to goodwill 2,000. D. Cash and bank account debit 2,000 to A's capital 1,500 to B's capital 500. Old ratio of A and B 3:1, so 3/4 and 1/4. New ratio is 1/3 and 1/3. Therefore, the sacrifice which is made by A, sacrifice made by A is 3/4 minus 1/3. 5/12. 5/12. And here there is a gain of 1/12. Therefore, the accounting entry should be cash account debit 2,000. B stands to gain, therefore B's capital account debit 500 to A's capital account 2,500. This should be the accounting entry. Correct entry. Bank account debit 2,000, cash account debit which is brought in by C. B's capital account is debited because he stands to gain 1/12 and A's capital account is credited by 2,500. When goodwill is withdrawn by the partners, dash account is credited. A cash, B partners capital account, C partners loan account and D goodwill account. When goodwill is withdrawn, it means cash is being withdrawn and therefore cash account is credited. Correct answer A. In the absence of an agreement between partners, on the death of a partner, his legal representatives are entitled to A. Profits till death, JLP, interest on capital, revaluation profit, goodwill. B. Profits till death, joint life policy, interest on capital, goodwill. C. Profits till death, capital, joint life policy, revaluation, profit and goodwill. D. Profits till death, interest on capital and goodwill. In the absence of an agreement on the death, his legal representatives are entitled to the profits till death, entitled to the share of the joint life policy, interest on capital, no interest on capital, revaluation profit, yes, share of goodwill, yes. Profits till death, no interest on capital, profits till death, capital, joint life policy, revaluation and goodwill. So correct answer should be C. In the absence of an agreement on the death, the legal representatives are entitled to profits till death, capital, joint life policy, revaluation profit and goodwill. A, B and C are partners in a firm in the ratio of 3:2:1. A retired and the firm received 1,52,500 towards JLP, which is appearing in the balance sheet at rupees 1,80,000. Cash account is debited and JLP account is credited with 1,52,500. What will be the treatment for the balance left in the JLP account? A. Credited to the partners' current accounts in their profit sharing ratio. B. Debited to revaluation account. C. Debited to partners' current accounts in their profit sharing ratio. Either debited to revaluation or debited to partners' current accounts in their profit sharing ratio. In this case, there would be a balance in the joint life policy account, a debit balance, and the same can either be debited to the revaluation account or debited to the partners' current accounts in their profit sharing ratio. So the correct answer is option D. A, B and C are partners in the ratio 2:2:1. B dies in February 2014. They've taken life insurance policies, the premiums of which are debited to the profit and loss account. Partners A, B and C. Policy values are 4 lakh, 7 lakh and 5 lakh. Surrender value 40,000, 70,000 and 50,000. What is the amount to be paid to the legal representatives of B? A 7 lakh 90, B 2 lakh 80, C 3 lakh 16 and D 7 lakhs. Policy of B is 7 lakh. Surrender value of A is 40,000. Surrender value of C is 50,000. So totally we have 7,90,000. 7,90,000 into 2 by 5 is what should be paid to the legal representatives of B. That's equal to 3,16,000. Correct answer should be option C. On death of partner, his executors are paid the share of the deceased partner in the profit of the firm till the date of his death. This amount is recorded in the profit and loss adjustment account, profit and loss appropriation account, profit and loss suspense account, or profit and loss reserve account. On death of the partner, the executors are paid the share of the deceased partner till the date of his death. In the profit and loss, since profit and loss account may not be made as at that point, this amount is actually recorded in what is called the profit and loss suspense account. Correct answer is C. In the absence of an agreement, the partners are entitled to interest on loan, B interest on capital, C salary, D commission. In the absence of an agreement, they are only entitled to interest on loan. Correct option A. A and B are partners sharing profits and losses in the ratio of their effective capital. They had 1 lakh and rupees 60,000 respectively in their capital accounts on 1st January 2011. A introduced a further capital of 10,000 on 1st April and another 5,000 on 1st July. On 30th September, A withdrew 40,000. On 1st July, B introduced a further capital of rupees 30,000. The partners drew the following amount in anticipation of profit. A drew rupees 1,000 per month at the end of each month beginning from January 2011. B withdrew 1,000 on 30th June and rupees 5,000 on 30th September 2011. Calculate the ratio of effective capitals. A 1:1, B 5:3, C 2:3 and D 4:3. To see their effective capital, let's just take A and B. They had 1 lakh. A had 1 lakh at the beginning of the year. B had 60,000 at the beginning of the year. So effectively for 12 months, 1 lakh into 12 months, 60,000 into 12 months. A introduced a further capital of 10,000 on 1st April. 1st April, so April to December, that becomes 10,000 into 9 months. and another 5,000 in July. That becomes 5,000 into 6 months. On 30th September, A withdrew 40,000 on 30th September. That means for 3 months, but this will be a minus figure. On 1st July, B introduced another capital of 30,000. 1st July, so that should be into 6 months. The partners drew the following amount in anticipation of profit. So this is not being considered. This is actually withdrawal, not capital. That those are drawings, but not withdrawal of capital. There is a difference. So what is the answer here? This gives us 12 lakh plus 90,000 plus 30,000 minus 1,20,000. That gives us 12 lakh. Here on the other hand, we have 60,000 into 12, that's 7,20,000, and 30,000 into 6, that's 1,80,000, that is equal to 9 lakh. 12 lakh, 9 lakh, ratio of effective capitals is 4:3. Therefore, correct answer is D. A and B are partners with their capitals rupees 1,05,000 and rupees 75,000. They admitted C for 1/5 share. He brings rupees 20,000 for goodwill. He agreed to contribute capital in profit sharing ratio. What amount of capital will be brought in by C? A 50,000, B 45,000, C 56,000, D all of the above. A and B partners with capital 1,05,000 and 75,000. C has been admitted for 1/5 share. He brings 20,000 for goodwill and will contribute to capital in the profit sharing ratio. What is the capital which is brought in by C? Right now the capital is 1,05,000 and 75,000. That is 1,80,000. 1,80,000 is A and B's capitals. Now C is being admitted for 1/5 share. So 1,80,000 is 4/5 share. 1/5 share would be 45,000. So correct answer should be B. 45,000.